Atlanta Home Loan was a mortgage lending and financing company based in Atlanta, Georgia. Al Fiorini founded the company in April 2002 with an initial investment of about $40,000. The company consisted of 4 telemarketers and 8 loan officers. Al established banking relationships that allowed AHL clients to borrow money at wholesale rates. AHL earned a fee of 1.5% of the loan amount for every loan funded. This provided AHL with an average revenue per loan of $3,200. AHL received its funds directly after the legal loan documents were approved. A broker's check will be overnight mailed to AHL's office, or the money will be wired directly into AHL's general account. In June 2002, he was admitted to the Executive MBA program at the University of Southern California in Los Angeles, and he decided to enroll. Al had several options for AHL. He could find someone to run it, he could try to sell it, or he could shut it down. But Al decided that he did not want to close AHL. He decided to find someone to operate the company in his absence. Joe Anastasia was one of AHL's loan officers. He had 20 years of experience in the mortgage lending business. His initial judgments about Joe were quite favorable, and impressed by Joe's background and performance, Al decided to make Joe a deal to be his partner. In July 2002, Al and Joe reached a verbal partnership agreement. Al started monitoring AHL from afar. He learned that in the following 2 weeks, Joe went to the office only 4 times. One day, he took a large batch of loan files home and did not return to the office for 3 days. In September 2002, Al made a final decision that he could not trust Joe. He turned to Wilbur Washington. Wilbur had considerable experience in mortgage banking. Al judged quickly that Wilbur would be quite good at sales. On September 1, 2002, Al signed a written partnership and licensing agreement with Wilbur. Wilbur would also be responsible for interviewing and hiring all new loan officers, paying the expenses of running the office, and managing the entire staff. However, Wilbur asked for authority to sign checks written against AHL's main bank account, but Al refused. Instead, as a gesture of good faith, Al left with Leticia Johnson, the office manager, 4 signed blank checks written against the main account. Later that month, when Joe found out what was happening, he became quite upset. Not only was he no longer the managing partner of AHL, he thought Al owed him quite a lot of money, and Joe filed a civil lawsuit demanding payment. While he was no longer managing the day-to-day operations of the company, Al continued to monitor AHL's operations closely. Al was also on the phone 3 until 4 hours per day talking with employees. In late September, Wilbur hired a new loan processor. Al thought that Wilbur was now employing too many processors and overhead personnel, but Wilbur reacted angrily. He told Al not to tell him what to do. At the time Wilbur took over the operation of AHL, 4 loans which will generate total revenues of $11,700 were about to be funded. This amount was supposed to be wired into AHL's main corporate checking account at Bank of America. When the loans funded without Al's permission, Wilbur personally collected the 4 checks himself from the closing attorneys. Al found out later that Wilbur and Leticia were actively dating. After depositing the checks to the Bank of America, Wilbur immediately wrote checks to himself and Leticia for the entire amount of $11,700 using the 4 pre-signed checks Al had left. However, since Wilbur wrote the checks against uncleared funds, the check bounced. Al had been monitoring the activity in the Bank of America account on the internet from Los Angeles. He noticed about the 4 checks that had been written without his knowledge. He immediately called Wilbur for an explanation. Wilbur told Al that he had withdrawn money from the account to pay the employees. However, Al did not believe this explanation. Al sent a fax and certified letter to Wilbur and Leticia and also spoke directly to them, ordering them not to write any more checks without his permission. Al also called Bank of America to stop payments on the 4 checks and asked the bank to transfer the funds from the general checking account to a side payroll account. The bank personnel, however, assumed that Wilbur had authority over the account since he had deposited the funds in the first place. Angry and frustrated, Al asked a friend of his to act as his agent. The friend was to go to AHL's office and fire all the employees. However, they all refused to go. Al called in the police to support the firing action, but when they arrived, Wilbur told the police that he was the owner, not Al. Not knowing who was telling the truth, the police just left. On October 14, 2002, Al sent a letter to all 100 AHL clients whose loans were in process that the company had to drop their applications. On October 15, Wilbur opened a new account at CBT in Atlanta, a bank where he did his personal business and where he knew the manager personally. Al discovered the second bank account and immediately called the bank personnel and informed the manager that Wilbur had opened a fraudulent account with CBT. But CBT refused to freeze the account or return the money. As a last resort, Al informed the Atlanta police. However, due to the relatively small amount of money involved, the police do not give the case any attention. To make things worse, Wilbur also filed two applications for warrants for Al's arrest. Wilbur claimed that Al was the one who had taken the proceeds received from the closing attorneys out of the company's accounts. Al had to return twice to Atlanta to defend himself. He also wasted over $7,500 in legal fees and travel costs. Wilbur renegotiated a lease with the landlord and established AHL as his own company. Al realized he had lost a lot of money and was forced to sell his home. Moreover, he had lost his company.
Thank you for watching!